this, where the max potential of this one so far went to 1 to 8, a very tighter stop loss. And if you understand the mechanics of the market, you can achieve this. All right, now what are you saying, folks? So what I'm gonna be doing here right now is actually showing you exactly how I think about getting into price and the reason why I do it. All right, very simply put, this is the higher time frame right here. This is the 10 minute, 1 minute, 10 second, right? Very simple, very straightforward. What I want you to understand is this: it's already established. If you look just on this, right, it's already established as a bullish market because we've been breaking highs. As you can see, the highs being taken. So now you can only expect, first of all, this is the trade that we got into today actually, and this is the one that we took up earlier today on the Discord, as you can see. This right here. Let me get to the types of trade ideas. Cool. Remember now, so I said UJ buys are setting up nicely. This is what we were looking at. As you can see here, this is what the 10 minute looked like. I had the liquidity target top here. If you look on it carefully, that's exactly what this is, which ran up here. Look at it. I was saying it's setting up nicely on the 10 second. So I remember what I said here. Just take a look and you see how the 10 minute looks now. So I'm showing them exactly how it looks in correlation to all the different time frames, so you can understand what you're looking for on each time frame. So when you scale down or scale up, it doesn't really matter. You can know where you're at depending on the time frame. Simple as that. So look, you see where price started to shoot up and then I got into there, right? So from there, I said I just took off some partials. As you can see, these two trades right here, this is where we're showing them. If you're on the 1 minute, this is where you'd actually be getting in right now, right? Getting in on that. But since I was doing 15 second, I was able to get in down here, right? Simple put. So bam, and then I said close the trade. Made sense because I saw structure pushing bearish. No, not necessarily that it was pushing bearish for me to come out of the entire trade, because the 10 minute is obviously still bullish, but I felt good with the profits and I took them off, right? Simple as that. Right now, I wanted to show you how I'd get into the trade live and see. I would have actually been in right here. Right there is where I would have gone in. So here's how the thought process is going. If you have what can be established as a bullish market is simple as this, like the very simplicity of the system, right? The simple part of it. If you have any candle break going to the upside, that can be considered as a bullish market, because on the lower time frame, what this is swing high, swing low, swing high, swing low, swing high, swing low, like, you know, higher highs, higher lows. That's what's happening in the market in any given candle system that you see right now. That's just what it is. So if you see that, you can take any two candles and actually just mark that off as a bullish zone or a demand zone. Let me show you, like even down here. Let me show you another one, an easier one. It's all over the market. I'm just gonna show you any two candles that you see pass each other and then they continue, it goes. Right, so I see that already. Now what I'm looking for right here is the exact same thing. Here's our two candle break on the 10 minute. Remember, we already established bullish, and this is now our new liquidity target top. We are established bullish from long time. The whole bigger structure, if you zoom out, right, we've been bullish, we've been breaking to the upside. So why would you not look for buys on the lower time frames? So simply put, if I got my two breaks right here, see this, look at how it's pushing. I'm just showing you, right? But it doesn't matter. I don't have to be like psyched out of trying to jump in right now or FOMO into it, because what's going to happen is that price is still just going to play around and still give me entries. But what this is the best entry that you can get. That's what this is. Those are the best entries you can get. See, the 1 minute came back down and all that. If I put on the MAs, you see where the MAs started to come back down, which is exactly what we want. And that created this liquidity target top, because it's all on repeat. The same thing is just happening on repeat. All right, here's your liquidity target top, and then from here we got that bullish plot. We literally should have just been in on this right here right now. Maybe if you wanted to be conservative, you take that low right there, or you put it under the swing low, your choice, whatever it is. So right now literally we'd be up 1 to 3.92 right now. Look at how it looks on the 1 minute. Look at how that looks on the 10 minute. Let me widen this out a bit more so we can be visible. It can be visible. So look at it. This is exactly how you'd be looking at this. So essentially, when you have multi-time frame analysis, what you're doing, let me make sure I record, but because God knows, When you're doing multi-time frame analysis, what it is that you're actually doing is trading the higher time frame, but what you're doing is getting in on a lower time frame, which causes you to have a very tighter stop loss. And if you understand the mechanics of the market, you can achieve this. That's the whole point of what I teach. I'm showing you so that you can actually be able to do these type of stuff. Now, I would obviously already be break even right here, just given of the movement, you know what I mean? It doesn't hurt to go break even. If it does come back, we just look for the exact same thing. But back on to how we identify this. On the higher time frame, we see that we're breaking bullish right now. As you can see, you can literally right now wait on price to come back and play around. But what we did, the very first thing, let me even just erase this so you can actually see, because the system is repeatable. So I don't care if I just walked onto the charts, I'll be able to just replicate exactly what I'm showing you right now. So look at this. The very first thing that I did, okay, cool. I looked on the charts. I said, okay, cool. This is the 10-second right here. I see that break of structure right here. Bam, that break is up there. What does that also look like on my 1 minute? Okay, I say, all right, well, that looks like it broke structure, of course. What does that look like on my 10 minute? Okay, that broke this structure right here. So I just draw this out. Draw that out, put that right there. That's now a high that has been taken. So I just draw it like that, simple as that. And that's how that looks. I'm okay with that, perfectly fine. Now the second thing I do is draw the low, because I'm assuming now that since it did this, that's the area of which I don't want to see price go under. So now I draw that as my structure low. Very simple. Sorry, my wife just decided she gonna just, you know. But all is good and dandy in the world of possibilities. All right. So yeah, same thing. So you see how I did the structure low down here. And when I did this one, it was the same one. This is the one that we got into today. Structure low, we broke up above. And then from here, we had that little drawback. And this is where we got in. If I can even pull it right here and show you March 24th. Here it is. So pull back and got in. Same thing. I'm telling you the same thing. Nothing different. Because the system is, I can replicate the system. I can do whatever. It's all the same thing. So, which is the reason why price is pushing up right now. Because we're going for the liquidity target top. All right, so look at this. From here, I see the little pullback after we broke structure. This pullback right here would have been good enough for me to say, if it comes up, I'm ready to look for price to continue. What they would want to teach you in old supply and demand is like this area right here is a demand zone. So they'd be like, oh, wait till price come back down in here and take out this, what do you call it? Fair value gap or whatever they want to call it. Right, and wait for price to come back in there. What's the actual tendency? The tendency is that price does not want to return there. If it's bullish, it's going to be bullish. It's just going to go. You understand? So now what we look for then, if that's the case, is the continuation trades. And how does the market mechanics work? Because this is what people are looking at, which is another piece of retail trash that people follow, versus, hey, what's the market actually doing right now? How can I look at the market and say, okay, this is actually what it's doing? I don't care about what people say or what the whole other system is. What is the market actually flipping doing? You see, look at the correlation. Look at the crosshairs. By crosshairs, I mean the two vertical and horizontal gray dotted lines, dashed lines. Look at it. Look at how it looks on the 10 second, 1 minute, and the 10 minute. Look at this area right here. Look at where it is. As you can see, this is at an area on the 1 minute where it broke this candle right here. Right? And then on the 10 minute, all it is just some internal play. That's all you're seeing. So we could have literally got in right here, because that's where our bullish plot was. So now you could have played the conservative game and then put your stop loss below the low. Because guess what this did? Oh, the system is repeatable. So this broke two candles. Look at this. This broke two candles, which is this right here. Broke that, came for a pullback, and then now created your liquidity target top right here. And also within this liquidity target top right here. All right. Liquidity target top. As you can see, look at the correlation. 1 minute, 10 second, and then the 10 minute. And you see where that liquidity target top is? The top of this one piece of candle. So every single candle itself is a demand and supply zone. Every single candle. Like a down candle is a supply zone. because within that one candle, if one candle, like on the daily chart, if you're looking at that one candle, inside that chart you have 24 1-hour candles. In that you have 60 1-hour candles, and then that times 24, you have all kinds of price movement in that one piece of candle. But that's the whole point. That's the supply zone or demand zone, whatever it is you want to look at it as. But this here is that same thing. So the high that got taken. And if you got confused just a while ago, let me just bring it back home for you. If you zoom out, see the same thing here. If you zoom out, you see the same thing. See the same 2 candle break, which now created that high, swing low to take back high. If you zoom out, here it is on the 1 minute. This is a big old structure being broken. And if you zoom out again on the 10-second, this is one of the big highs that got broken. And now to give you a sign of continuation, look at what this thing did so far just a while ago. So now if you zoom in all the way, because the market is fractal, you're looking for the exact same thing we just saw over here on the 10-minute and on the 1 minute to happen on the 10-second, even on a smaller time frame. So on the 1 second in here, there's a lot of plays going on, because remember, this is a 10-second chart, so each candle is 10 seconds, which means 1 second, there are 10 1-second candles in each one of these. So this is 10, 20, 30, 40, 50, 60, 70, 80, 90. There's 100 1-second candles in just this little space alone. What do you think that looks like? Let me show you. I want you to understand this. Look at it. So look at all these plays. So this is an area that you could have gotten into once it broke this, and you said to yourself, because remember the correlation between this and the 10-second, once it broke that, you can see why we got into that area, right? Simple as that. And look at these. These bullish plots are all areas that you could have gotten into on the 1 second chart to take this whole thing up. And that is mirrored as the same thing on the 10-minute chart. Look at this. When it was pushing, going, what does this look like? It looks like this. Why? Because it's the mechanics of the market. It does the same thing over and over and over again. It doesn't matter the time frames. You have to understand that. Anyways, so back to the 10-second. This is what we're looking at, right? See this pullback right here? This is perfect to take through the high right here to continue. Why? Because your 10-minute is continuing. More than likely, it wants to just go and take out this liquidity target top. But for me now, it already passed where I would want to be involved. So I am going to humbly wait. Chill out and wait. If this 1 minute comes back down in here, then that's where I'm looking for it to come back up, break the 2 candles again, and then look for my trade. So I take off that liquidity target top and put this one as a high that is taken already now too. Simple. Look at price just moving, bro. Look at that. So it's simple. And all we're doing now is just looking at the highs being taken, going up. This was one right here. And look, what does that look like on the 10-second? Look, see there? Another high, another high. This is now another high. So you literally could have gotten into this trade right here, because that just passed that. You could have, but of course you don't want to. Why? Because the price is already extended up there. You want to get in when it's down here, when it's about to make the first push. Because it's not, if it fails, that doesn't mean we're going bearish. Because look at what that looks like on the correlation between the 1 minute and the 10-minute. Look on the crosshairs. Look at that. That's nothing. That's just a tiny pullback to come back up and then continue going up again, like what it just did right here. Push up, come back a little bit. That don't mean you're going bearish, because remember, our low is right here. So price could have literally came back and played around right in here, all it wanted to do. And now as soon as it passed back that high, we're good to go. See this? This is the same reason why you wouldn't want to get into that trade up there. This is where you want to get into that trade down in here. And so far, that trade has run up to a 1 to 6, literally. So obviously the reason why I didn't even get this video started while or you couldn't see this just before, because the video started while it was just there, is because I was starting up the video, turning on my lights and shit like that. So yeah, very simple stuff, very straightforward. You can see it, you can understand it. So what we're doing right now, let me show you how I would look at this. Is I would wait for price to come back down a bit, and on the 1 minute you can literally, I can get rid of this because it's not like I took the trade. This now is creating, as you can obviously see, your new liquidity target top. Liquidity target top. So now what you're doing right here, as you can see, is bearish on the 10-second, still obviously bullish on the thing. I just showing you this with the MAs because that's just how it is, just so you can see it. But for this, you can turn on about the MAs and look, you're still bullish. And if you turn on the MAs on the 10-minute, mercifully still bullish. Of course you are. And it's coming up into going back into bullishness, right? So now this is just the beautiful beginning of that 10-minute going back into bullishness. But as we already know the structure, this is the reason why I kind of don't use the MAs anymore. But the algo is literally triggering using the MAs. And now you can use the plots based on what I'm showing you now with the 2 candle break to make it even simpler for you. You understand? So now you're trading with the market mechanics in your mind and then using the plots to get into trades if you want to. So see, yep, just like I want to see price come up, come back down now, and then I look to take that high to go straight up, and let's see if we get that. So now if that closes right there, which perfectly it closes, I would take a trade right here through this high right now with my low either right here, or conservative, I can put my low down here, because what did it just do? Let me show you. This just created this as the low, and if it wants to break that low right now, then I know for a fact that we're just in for a bigger choppy area. Simple as that. That's now the structure low, which is exactly what we did right here. See the same low, see the breaker structure. So now the 2 candle break, see the 2 candles here, break, that's there, that's the high that it broke. So now this would now be your new high liquidity target top, and then now this is your next new liquidity target top that you're going to trade through if it passes this. Simple as that. And then your stop loss is going to be just below this low, or if you want to be conservative, put it below the entire low, and it doesn't matter what time frame you're trading on, this will be the same. You understand? And so right now, if it passes that, then that's great. Now if it passes this, then we're in for a longer term like choppiness. Simple, which means the 1 minute just wants to play around a bit more. And look at this. So now it tapped us on, like we're into that trade now, and we're just gonna see exactly how it plays out. If it fails, it just fails. If it wins, great. Doesn't matter. So now again, now see, your low could be down here, or your low could have been underneath that one now, because it came down and then came back up. So your choice. And because of how close it came back down, this one is really safe to use, right? So I'd use that probably. More than likely I would use that, because that's just how I'd prefer to do it, because you get higher risk to reward with putting it to the low instead of the full low down here. But again, it's just a conservative way. All right. And remember, it's riskier to take the trade up here because it's riskier to take the trade up here because prices are already so high. Cool, see? So you would have taken the L right there if you put the low right there. And if let's see what happened if you did this one. So this one would have changed and became a high that has been taken. Great. And you took a L right there. Beautiful. All right. And that's just how the system goes. Oh, there's nothing wrong with your system. You literally just took a L. What's wrong with that? There's nothing wrong with that. So that's a high that got taken. And now guess what? All of this now to me tells me that this is now a whole choppy area. I don't want to take any more buys. So if a buy comes and set up right here, I don't care about it. The only way I'd get into a trade right now with this part right here is if it passed through this, the entire structure high, and wherever this goes and settles as the low, that's the only one I'll get into. If it does this, you understand? And that's it. Take that high instead, which would be the 1 minute creating the same thing, or just the 10 minute creating another break of the candle structure to go higher. Otherwise, there's nothing for me to do. And personally, I just wouldn't, I just wait till I get a entry like what we just did here a while ago. Something very tight like this, and have it continue like this, where the max potential of this one so far went to 1 to 8. So already, and how would I correlate that in the 1 minute? Because I can't trade that on MetaTrader. I'd look at what it looks like on the 1 minute. So I'd say, okay, this is what it looks like, that trade. I know it's underneath that 1 minute low. Cool. So when I get into MetaTrader, all I'm doing is this. When I get into MetaTrader, that's UJ, right? Yeah. I'm looking on, see the trade right here. Where is it? Is that it? Yeah, so once I see that, you know what, that the MA is confusing me. That will happen. Great. So as soon as I see this, as soon as I saw that, I literally knew that I would have gotten into that right there and put my stop loss right here. Simple. And look at that, I would have been up on that. Simple as that. Very simple. And now we obviously would be break even. So right now I would have done take partials already. I would have already taken partials and just been chilling on this. If it wants to continue to that 10-minute target top, guess what that ratio would look like? That ratio would look like a 1 to 20. And that's not that difficult. As you can obviously see now, it's not that difficult, because this is the exact same thing we did earlier today, which was this, when we got into this one right here. But only thing, obviously we got in a little bit late. And the reason why it was late is because of how the structure was. You understand? Just because of how the structure was. But now that you see this 1 to 20 looking up to here, that don't look like a crazy trade, right? That just look like structure would just be playing out to go for the highs. But on the 10-minute, that definitely don't look crazy. That looks very achievable. That looks simple for it to do. And that's the whole point. It is simple for it to do. If I go on the 4-hour chart right now, look on this, you can see that we bullish on this too, because we've been breaking highs, right? I just showing you. So see the 2 candle breakdown here, broke, coming up, boom, high, got taken. Even though it broke these ones coming down, this is where people started to short the market. Nope, price started coming back up, broke these 2 candles. Look at it, man. The time frames don't matter, family. Look at it. Broke that, which means what? We draw our low right there and say that that's our low, and price never does come back there. So when you see when it created that, you could have gotten in right here just on this one time frame alone, and you could have put your stop loss underneath that, and right now you'd be in on the 4-hour chart at a 1 to 2. Just showing you the possibilities. And see here, look at these new ones right here being created. This right here is that same 10-minute higher time frame. Look at the crosshairs. Is that 1 minute thing there right there? Simple. I know you're looking for the 4-hour to just continue going up. That's it. Even though overall you're bearish on this, remember we only trading as in the highest time frame that we're using right now. Right here is the 10-minute. Time frames don't matter, yes, but we already understand that we've been breaking highs and stuff like that. Now until we continuously breaking lows, that's the only time I look for a short on the 10-minute, and then start to look for shorts on the 1 minute and such and such. So hopefully you understand exactly what I was just trying to show you. And yeah, man, do some sick shit with that. Join the Discord if you haven't already. You have a free version where you can still have access to some of the course materials. By course, I don't mean an actual course. I just mean the community itself, where you can learn the stuff. You can still become profitable from the YouTube videos. Otherwise, from that, if you want access to the Innovate indicator, you obviously gonna have to pay for the premium membership. Right now, if you look in the description, you can see where you have a 7-day free trial. Get the 7-day free trial. Even if you just want to test it and see if you like it or not, and then watch the videos that I post. And obviously when you do test it, you'll have access to the, let me show you, this is the Discord. You'll have access to the master classes and the key level course areas, everything, right? This is where we have the master classes, so you can understand how the market mechanics works. I have breakdowns for you and how to approach the market, how to get into these trades and all these different things. You have a community of a lot of members here. I think we up like, what is it, 53, 4, boom, so 58 members, right? We got 58 members in here, and yeah, we just taking trades and making bread right now. So break bread with me, famo. Yeah, so now look at this last thing we're gonna cover now. See, we would have been break even somewhere down here, so it still hasn't touched. Right now, what it did just do, broke this as the 2 candles. So now I'm assuming now that we'd be bullish from here. I'm assuming now that this is exactly where they are saying they don't want price to go below. It has just put in the low. That's just what I'm assuming. And then from there, I can now look on my lower time frame to say, hey, when it pulls back, just like it just pulled back here, I can take a trade through this high right here. And let's just see how this one turns out before I leave. See that? I hope you realize the pattern. Doesn't this look familiar? It looks familiar because this is exactly what we just did up here, right? And it looks familiar because this is exactly what we did down here. Simple. And on the trade earlier. It's supposed to look familiar because it's a system. It's a repeatable system. And now guess what? The cleanest indication that it's not ready is that it didn't pass this high. It didn't give you the entry. And look at it, just tumbling. So now if it goes below here, call off the trade. We're good to go. Simple as that. And see, it didn't. Let's just see what we would get. And look at the correlation. So if I drew this and I did that, look at what that would look like on the 1 minute. So it's easy now for me to go on MetaTrader and say, okay, cool. Right now, if it crosses this high right there, because it's the same thing as this, if it crosses that, my low can go below this wick right here or the structure low, which means I can do that right there. So this is how I'm able to trade the 10-second chart and still just, you know, be able to trade the 10-second chart, but on a 1 minute perspective on MetaTrader. So yeah, this is our assumption now that this is the low and that this is the high that it wants to trade through to continue to eat this high and then go to the 10-minute and to continue. That's the same high on the 1 minute to continue now to go and take out this high to continue the bullish structure that we've been seeing, as you can obviously see, right? So remember, as you can see the trades, look at this. This is the blue. This is where I got in. This is where I got in. This is where I took a partial. This is where I took the other partial. This is where I closed the trade. You can see it. See, I got in right here because this is the same setup. And then I got out early because I realized based on whatever I saw, I was like, okay, cool. It's not going to push. Simple. Yeah, FOMO. So let's just see how this one works right now. I'm not going to take the trade. I'm just showing you like what it looks like, what the possibilities are. Simple as that. Let's just see. So now this would be my liquidity target top here, obviously. Why? Because it hasn't been traded through as yet. This one has been traded through. This structure right here. And we're assuming this is our low right now. And if it trades right through that low, there's nothing for us to do until it breaks another 2 candles up. There you go. Broke it. Right for me now, there's nothing there to do. Simple as that. In my brain, this thing can just tumble down. And see, I told you it can come back and give us a nice setup again. So I don't have to sweat coming down here, right? So now, bam, break even. On that other trade, we'd have gone break even. Max potential went to 1 to 8. Went to 8. Went to 8 point whatever it is, right? And now we just chilling. This is what the structure looks like. People are now trying to short into this market. That's what they're trying to do. They're trying to short into this market, not knowing that the likelihood is that it's going to just play around here and then continue going back up. Because the 10-minute has been going back up and taking highs and taking highs. Here's another one. Right? Hopefully you've seen all of this. That's where it took that high. And then from there, that's where it took this high. That's where it took this high and this high. And just kept doing the same thing over and over. So this one would have been break even now. At that, we would have taken partials, of course. And shit, I might actually get into a live trade to show you, like if it works or not. So yeah, because if it works out, then this would be a very good trade, right? Let me put this at 10%. Let me make sure it's at 10%. Yeah. See, I mean, pretty much would be the same thing, but 10%. And then I want to save that as a template. Let me just load that and make sure that it's at 10%. This trade manager right here is called Uber Trade Manager. This gets me in at the percentage that I want to get in at. So no matter what, right now, if I try to enter this, if I try to get in right here, it's going to calculate at 10% from that ask price. It's going to get in at 10% there. If I click down here, which would be my stop loss. So what's easy about it is that wherever I click is where it's going to put my stop loss, and then calculate that distance to be 10% no matter what, because that's the percentage that I put. If I had put 50%, it would do the same thing. So it doesn't matter if it's this wide, it would calculate this entire distance as 10%. Doesn't matter if I click right here under this low, it'll calculate that as 10%. So now it's easy for me to get into trades like super quick. And this is actually what we're supposed to look at, not gold. So yeah, we're chilling right now, just waiting on this to not pass this low right here. So on the 1 minute, obviously on the 1 minute, you'd say, cool, we've been breaking lows. Let me show you how that looks on the 1 minute. Yep, cool. So you'd see that we've been breaking this low and coming down. Oh yeah, I didn't take this trade, so I can just get out of that. We broke that low, we broke this low. See the two candles here, 1, 2. So we broke that one, and then you could have taken the sell right here. So now you'd have been in this short right here, but that's pointless. Why? Because you're bullish on the higher time frame. So that's just a gamble if you want to go against the trend. You don't want to go against the trend. The trend is your friend, as you obviously know. Here's how that would look like on the smaller time frame. See that break a structure right there, then came, and then now you could have traded through there, which is the same thing I'm showing you on this, right? And if I inverted this, now it would look the same for bullish, right? You see, break a structure, and now you can buy through that here, right? It's all the same thing. That's the whole point. So you can sell, buy, you can do the same thing over and over and over again. If you see a market that's selling, you're looking for the same thing. Look to see on your higher time frame if it's breaking structures going down. Then you scale into the smaller time frames, wait for it to start breaking structures going down, get in on those, and then you take the ride straight down to the liquidity target bottom. Make trading simple, folks. Make it simple. Right now we're just waiting on that 2 candle break to the upside, like what I was showing you. And as a matter of fact, I wouldn't even do that. I wouldn't do that. Why? Because I don't see the structure, right? Because what I'd look on is this. Again, use the higher time frames. What did we just get on the 10 minute? On the 10 minute, we just got 2 candle breaks going down. See? So use the same system to protect you as well as get into the trades to make some money from it. So I see that we just broke down there for the 2 things. So what I would wait on right now is for the 10 minute to create a 2 candle break upward. Simple. So there's nothing for me to do. So I can end this video right now, because even if this comes up right now and comes way up here right now in this candle here, there's nothing for me to do. So we'd be sitting down here for like the next half an hour or 40 minutes waiting on a setup, which I'm not going to do. So anyways, big up on yourself. Hopefully you learned something. Peace.